As you guys know me, when it comes to forex trading, I'm not a fan of too many indicators because most indicators are what we call lagging indicators. All right, so I don't like my chart to look like this with too many indicators. One indicator telling me to buy, another indicator telling me to sell, another indicator is telling me to stay out of the market. At the end of the day, I'm totally confused. No, I prefer my chart to look like this: pure naked price action trading, where I'm able to make my judgment without being clouded. All right, so but talking about forex indicators, there's one tool which is very unique, very effective, and very exceptional, which I want us to talk about on today's video, which is known as the Fibonacci tool. So today I want us to cover the Fibonacci tool and how you can use the Fibonacci tool to look for solid signals in forex trading. And from research, we just discovered that maybe the reason why I'm too smart is because I'm related to this guy. From research, they say I might be related to this guy. So this might be my uncle, who knows. So let's talk about my uncle Fibonacci, or Uncle Fibs as we used to call him. All right, anyway, with that being said, let's jump into my screen. So you can see we're just going to go straight to the point because I don't want the video to be too lengthy, but I want you to get the point. All right, so I want us to just jump straight into the point. We're just going to be covering what is the Fibonacci, you see. So let's change our color. I like to always use red because red stands out more. Good. So we're going to cover what is the Fibonacci. We're going to cover the types of Fibonacci, how to use Fibonacci retracement. Then we'll also cover using Fibonacci retracement with support and resistance. We'll also cover using Fibonacci with trend lines, because you can still use Fibonacci with trend lines. Then using Fibonacci extension, because we have two types of Fibonacci. We have Fibonacci retracement and Fibonacci extension. So how can you use Fibonacci extension to place your take profit? And how can you also use Fibonacci extension or the Fibonacci tool to determine where to put your stop loss? All right, let's go. I'm too excited to explain this to you guys. So as you can see on my screen, this is my Uncle Fibs. Uncle Fibs, or Fibonacci. They call this guy Fibonacci. So his name was Leonardo Fibonacci. He was an Italian mathematician who came out with a series of numbers. All right, so this guy was an Italian mathematician who came out with a series of numbers known as the Fibonacci series. And then after discovering those series of numbers, he discovered that the ratio between those numbers and alternate numbers between the same series produce a sequence that represents normal life phenomena. All right, normal life phenomena. So I'm going to explain that to you. So talking about the Fibonacci series, you see, this was a discovery by Leonardo. This is his name. That is why it is called the Fibonacci tool, right? Because it was discovered by this guy Leonardo Fibonacci. He was an Italian mathematician, where he discovered that a series of numbers that create ratios that represent basic phenomena in the universe. So I'm going to explain this when we go ahead. Then his ratio arises from the following numbers: 0, 1. I'll show you how the number is formed. And guys, don't worry yourself. Don't worry. The reason why I'm showing you this is because for you to be able to use an indicator or even a forex robot, it is advisable for you to even have an idea of what is going on the background. All right, it's advisable for you to even have an idea of how that tool is formed, even if you are using a robot or an indicator. That is why I'm teaching you how the tool was formed, so that when you are using it, you'll be able to have an idea. Even though when you put this tool on your MT4, MT5, the software will automatically calculate these levels for you. But I want to just use a couple of minutes to show you how this tool was formed and how it came into existence. So these numbers was known as the Fibonacci series. And then after a couple of numbers on the sequence, if you measure the ratio of any number to the succeeding number, you have 0.618. All right, you have 0.618. Good. Then they say if you measure the ratio between alternate numbers, you have 0.382. Let me explain what I'm saying. Any person can come out with this series. The first, if we have to start from 0, the first digit we have, or the first non-zero digit we have, is 0. And then after that, what do we have? We have 1. If I add 0 to 1, what will I have? I have 1 again. If I add the succeeding number to the present number, if I add 1 to 1, what will I have? 2. If I add 1 to 2, what will I have? 3. If I add 2 to 3, what will I have? 5. If I add this to this, what will I have? 8. If I add 8 to 5, what will I have? 13. And if I add 13 to 8, what will I have? 21. all right, and so on. All right, so you see how, so this is what was called the Fibonacci series. It started from 0, then you have 1, then you add 0 to 1 to have the other one. You have this to this to add this. You add the present number to the succeeding number to have the other number on the series. All right, so because of this gives us what we call the Fibonacci series. All right, now let's calculate now the Fibonacci ratios. If I take down this and divide by this, if I take 2 and I divide by 3, or if I take 3 and I divide by 5, if I take 3 and I divide by 5, I'll have approximately 0.618. All right, I'll have approximately 0.618. And if I take now 3 and alternate, if I take now 3, I skip one digit and I divide by 8. If I take now 3 divided by 8, I'll have approximately 0.382. All right. So these two numbers were known as the Fibonacci magic number. And if I have to draw a line here and call this line the 50%, I call this line the 50% line, then this one above will be down what we call the 0.382 or the 38%, or you can call this now, the one below will be 0.618 or the 68%. All right, the 68%. So when we be going ahead, you see that the most significant, because this guy came up with the series. This guy came up with the Fibonacci magic numbers, and the most significance, because there you have different levels. The most significance will be our 38 level, our 38% level, our 50% level, and our 68% level, or 0.618. Because on some software you see they write 0.618, or on some platforms they will just write 68%. All right. So those are the most significant Fibonacci levels: the 50% level, the 38.2% level, and the 61.8 level. All right. So you see that that is how this guy came out with a series, and then using the series he was able to come out with the Fibonacci magic levels, or the Fibonacci magic numbers. All right. And now these numbers represent this particular series represent a lot of life phenomena. Let me show you what I'm talking about, because even your fingerprint, if you have ever given your fingerprint anywhere, it has the same sequence. It starts from 0, going to 1, going to 2, going to 2, then you add 1 to going to 3, going to 5, going to 8, going to 13, going to 21, going to 34. So it follows that same series. All right, good. So let's go to the other slide. You can see here's the same thing I'm talking about, because if you can see here, we have something like a snake. If you've ever seen a snake, the share of a snake looks similar like this. It starts from 1 inside, then you have 2, you have 3, you have 5, you add 8, you have 13, 21, 34. So if you keep on adding the scale on that share, it keeps going out. It keeps going out in a spiral. All right. So it keeps going out like this, like this, like this. So if you keep going, that is how the share will keep going out. Will keep going out. All right. So now, I've already explained, I won't be going through all of the Fibonacci retracement levels. These are the different levels, and I've already mentioned the most significant levels are the 38% level, the 50% level, and the 61.2 level. Fibonacci retracement assumes that if the market is going up, and a retrace, the Fibonacci retracement tool will help you to be able to know where to get into the market. All right, that is why it is called the Fibonacci retracement tool, because it assumes that if the market is in a trending market, the market will normally retrace before assuming the normal trend. So when the market retraces, the Fibonacci tool will help you to be able to know where to get into that trend. And then the Fibonacci extension tool will help you to know where to take. Since you've already gotten into the trade, the extension tool will then help you on how to place your take profit, or on how to place your stop loss. Then traders use the extension tool to place take profit. Then in order to apply Fibonacci's levels to your chart, you need to identify swing highs and the swing lows. So in order to place it in your chart, you need to identify the market is going up, you have your swing low, your swing high. So you need to identify your swing low and your swing high to be able to put the two from here, you draw it here, and then you'll be able to have the different levels. And those levels will tell you, okay, if the market push pulls back to this level, then you need to buy at that particular level, you see. So that is just what I'm explaining on this particular slide. Good. Let's go to other live phenomena or nature examples of the Fibonacci. This is why this particular tool is very, very fascinating, because if you have to check here, even just taking, you see spiral, the spiral within an aloe plan. If you have ever seen an aloe plan, the spiral, it has like a spiral form, right? The spiral normally starts from 0, then you have 1. That means the first one between is 0, and then you have 1 spiral, you have again another 1 spiral, you have 3 spirals, you have 5, 8. So the spiral keeps going out. It keeps so it is in a spiraling format. You see, so that is just an example of the Fibonacci series, because remember the Fibonacci series started with 0, 1, 1, 2, you add this to this, you have 3, you add this to this, you have 5, you add this to this, you have 8, you add this to this, you have 13, you add this to this, you have 21, you add this to this, you have 34, so on and so on. It's the same thing. It's the same thing. See, even this one, the Milky, if you know what we call the Milky Way does, even in geography, it has the same format. It has the same spiral format. All right. Even a sunflower. Most of us already know sunflower oil. We even cook with sunflower oil. The flower itself follows the same series. It starts with 0, 1. So you see. And it starts going out. It starts going until at the extreme you have hundreds and hundreds of different petals at the end of the flower. Even this one, the chameleon. They say the chameleon tail. The chameleon tail. You can see that is a typical example. The same thing. Then this one also, which is known as the American giant millipede. The American giant millipede also have the same structure. And then the share of a snail. Remember, I already mentioned the share of a snail. And then even on your finger, if you ever give your fingerprint somewhere, go down and check to even confirm for yourself. Even your fingerprint, it has the same structure. Your fingerprint has the same structure. It starts from 0, 2, 3, 5, 8, 13, 21. Even if you have to, it has the same structure. That is why this tool is so effective. All right, this tool is so effective. Now let's go on how. Let's talk on how to use the Fibonacci tool now to place your trade. Remember, I already mentioned very well that Fibonacci works best in trending market. So if you don't have a trending market, then you shouldn't use it. If your market is ranging, if you have a ranging market or a consolidating market, then you won't be able to use this tool. This tool is mostly used in a trending market. Your market must be trending, must either be an uptrend or a downtrend. Good. So let's assume we have a trending market. The Fibonacci, they say you go long, so you buy. You go long when the market in an uptrend retrace back to a certain Fibonacci level, and go short when a market in a downtrend retrace to a particular level. Good. I'm going to explain that. Don't worry. This recent, see, this is very important. The recent. So let me put the recent. See this. The recent significant, these two words are very important. The recent significant swing lows and highs are used to determine the levels. So you use the recent and the most significant, because in the market you have many swing lows and swing highs, but you use the most significant. A price retracement to the 38% level or the 50% level is a clear characteristic of a possible reversal, right? Possible reversal. Good. Now we have our uptrend. The market was going up. You can see the market was going up, and at this point we have a retracement back to this point. We have a retracement back to this point, and the market shoot again to that point. So what do we do? Remember now where is the current market price? The current market price is here. And we've already asked ourselves, is the market trending? Yes, the market is in an uptrend. Where is the current market price? This is the current market price. The next thing, these are the steps you have to follow. Is the market trending? Yes. Okay, where is the current market price? This is the current market price. Do you have any significant retracement? Any significant retracement where you can be able to plot your swing low? Yes. You can see the market was going up, then here we have this drop, this retracement. That is why it is called the Fibonacci retracement, because you are using it to look for where there's a possible retracement and the assumption of the normal trend. So you ask yourself, this is where we had our normal retracement, right? We had our normal retracement here. So this one will form what? Our swing low. This one will form our swing low. Then after this one, remember, the market is now here. The present market price will form what? Our swing high. So we have two things. We have the two most important things that will enable us to be able to plot our Fibonacci 2, which is our swing low and our swing high. So you just go now on your MT4, just go and type Fibonacci retracement. The 2 will just pop up. You just click on the 2. You click on your swing low. When you click on your swing low, you just drag the 2, all right? You just click on your swing low and you drag the 2 up. You drag the 2 up to where you see your swing high. When you drag the 2 up to where you see your swing high, automatically these levels are already there. You can see this is the 50% level, this is the 61.8% level, and this is the 38.2 level. So you can call it, remember the 0.5 level or the 50% level. You can call this the 61.8% level or the 0.618 level. You can call this the 38.2% level or the 0.382 levels. I already showed you guys how to calculate this, these levels. I already showed you guys, because now the first one that was gotten by dividing the two succeeding numbers on the series was the 61.8 or the 0.618 level. Then dividing by the alternative numbers on the series, we're able to have the 0.382 level, and in between the 68 and the 3.82 we had our 50%. Those are the most significant, just write it down, those are the most significant levels on the Fibonacci retracement, because now you can see we have our 100% down here, and we have our 23%, 23.6% up here, and we have our 0% up there. So, but these are the levels you need to be looking out for, right? Good. So now, let me undo this so that we can be able to start again. Let me undo that. Good. Good, perfect. So you can see that we've already put a 2 on our chart, and here we have the 50%. You can see here we have the 50%, the 38, and this. How do you get into the trade? So how do you jump into this trend? Because remember, this is an uptrend. The main reason why we are using this tool is to look for possible places where we can get into the trend, or to look for better places or possible places where we can jump into the trend. The market is going up. We don't know where we can get into that trend. So this tool enables us to know when and where to jump into that trend. So for us to get into the trend, remember I'm doing this step by step so that you understand. For us to join this uptrend, what we do is we wait for the market to retrace to any of these 3 levels. We wait for this market to retrace to the 38.2% level, or the 50% level, or the 61.8 level. If the market gets to any of these levels, you're going to buy without even thinking twice, all right? So if the market gets to the 38, you buy 50%, you buy 60%, or 61%, you buy. So what you do is, once you've already put your 2 on your chart, what you do is you just sit and you're just waiting and watching. If the market retraces and get back to any of these levels, then you can buy at this, then your stop loss will go down here at 100%. Then if this is arrow, then your take profit will be 2 arrows. So if you are risking 50 pips, then your take profit will be 100 pips. Risk to reward of at least 1:2. Good. So this was the before chart, all right? This was the before chart. This was the before. Now let's see. Let's see. Let me show you how amazing this tool is. Come, let me show you now what happened after this. After we put this thing now on the chart, see what happened. Can you see how amazing this tool? This is the same chart. This is the same chart. It's just that I've just taken down the bigger picture. This is where we were plotting. Remember, this was our swing low, and this was our swing high. This is the same chart. And when we plotted the chart from here, when we plotted from here to there and had all our levels, remember these were our levels. Once we had our levels, the only thing we were doing, we were waiting for the market to get to the 38.2 level, the 50% level, or the 61.8 level, and see what happened. Immediately after that, the market retraced back to the 38. You can see the market retraced back to the 38.2% level. And what happened after that? It continued going up. You see, so now, as soon as the market would have gotten here at, you can see here I wrote 38.2 Fibonacci percent level head. So as soon as the market got somewhere here, you would have bought somewhere here, you would have bought somewhere here, buy. You put your stop loss here. If this is arrow, then your take profit will be what? 2 arrow. Risk to reward of at least 1:2. You see, So that is how this tool is very, very interesting to you. This is how this tool is very, very fascinating. That is how you use it. As soon as you determine your swing low, your swing high, you plot, you just bring your tool, you put on the swing low, you drag to the swing high. Then you are just waiting for the market to retrace back to any of this level, the 50% level, the 38.2 level, or the 61.8 level. If the market gets to this level, that is where you're going to buy. This is now in an uptrend. What will happen if it was in a downtrend? Let's jump into our chart and see if the market was actually going down. You can see it's the same thing. You can see this is the before chart. You can see this is the before chart, because now we have a downtrend, right? So if the market is in a downtrend, this is still from my MT5. I took this from my MT5 so that I'll show you in real life. I shouldn't just be talking hypothetically. Let me show you examples in real life. This is from my MT5. So the market is actually going down. You can see the market is going down, going down, going down. And here we had a retracement. Then the market shoot to this particular point. Good. So the first thing, remember our steps. Where is the most significant swing low? This is the most significant swing low. And where is the current market price? The current market price is there. It forms what? Our swing high. This is the swing high. And where is the current market price level? That it forms the swing low. All right. If it's in a downtrend now, you bring your charts from the swing high, you pull it down to this level, and you still have again levels. You still have levels that will come out under that under the two. You still have your 38.2 level, your 50% level, and the 61 point this level. The same thing, you are just waiting for the market now to retrace back to any of these levels. We are just waiting for the market to retrace back to any of these levels, and we sell. You see, so we are just waiting for this market now to retrace back to either the 38, the 50%, or the 61%, and we sell. And see what happened after that. See what happened after that. Good. Exactly as we predicted. We're just sitting and waiting. Because in trading, sometimes you make the highest amount of money waiting than trading. All right? As simple as that. In trading, most of the time, I make money waiting than trading. We're just waiting. We already had our tool. We already plot our tool from here to here, and we had all these levels. We had our 50%, the 38%, and the 61%. And we were just waiting for the price to get to any of these levels. And what happened? The price retraced. Good. See, this is a little bit different now, because the last example, which was in the uptrend, the price was held at the 38% level. But now this price was held at the 50% level. They are all still valid, because remember I said the most significant levels or the valid levels are the 61% level, the 50% level, or the 38% level. So even if it gets to the 61%, I would have still sold somewhere here. So we sold there, and the market has been pushing down ever since. This is the current market price. The market has been pushing down ever since. So once we say here, our stop loss would have gone here, and if this is arrow, then our take profit will be what? 2 arrow. Risk to reward of 1:2. At least 1:2. That is so amazing. That is so. So if you see me even talking about an indicator or a tool, it means I have to really give credit to that person who did the research, because this is the most effective tool, that I can talk about. I don't like trading with indicators, because they all cloud my judgment. They cloud my judgment. But if you see me talking about the Fibonacci tool, it means this is a very good tool. So how do you use now the Fibonacci tool to determine your profit, to place your profit target? Because you can still use this tool to place your stop loss and your take profit. It is very easy. It is very easy. Remember I said, if you sell at any of these levels, all right, without going through all of this here, let me tell you how you can even still the retracement level to place your stop loss and your take profit. Because coming to the Fibonacci retracement and the Fibonacci extension, the most effective one is the Fibonacci retracement. The Fibonacci extension is just for people, okay, they don't actually know now the dynamics of trading, and they are still relying on that too. If you know the dynamics of trading, then from the Fibonacci retracement, you'll be able to place your stop loss and your take profit without any problem. And that is what I want to show you. So let's just take take this same trade, for example. So long as the market pulls up to the 38, the 50% or the 61% level, and you say at this, remember this is a downtrend, the market is still going down, and you say at this level, what you do is to give your trade room to breathe. I used to call it room to breathe, RTB. To give your trade RTB, room to breathe, what you do is good. You can place your stop loss at the 100% level. So your stop loss will go here. So you can place your stop loss at the 100% level so that you give your trade room to breathe. And if you place your stop loss at the 100% level and you have a certain number of pips or the dollar amount called arrow, then your take profit should be what? Your take profit must be at least 2 arrow. I sing this all the times. Then your take profit must be at least 2 arrow. So your risk to reward must be at least 1:2. So if you are risking 10 pips, then your risk to reward must be what? 20 pips. If you are risking $50, then your risk to reward must be what? $100. All right. So that even if you are just right 4 times out of 10 times, no matter how crappy your strategy is, no matter how primitive you are on using these particular tools, even if you just have 4 trade right out of 10, you will still be making money. You will still be making money. Good. So that is how you use the tool to place your stop loss and to place your take profit. That is the best and the most effective practical aspect of it, which after years upon years of trading, I've seen that it is more effective than relying on the extension tool. All right, because some people use the Fibonacci retracement to place the trade, and then you see them, they're going again to put the extension tool and bring in to put on their chart, and they're looking for where to place take profit and stop loss. Remember, that is already getting too much. That is already getting scary. That is already looking like this chart. All right, it's already looking like this chart, and I don't want our trading to look like. I want pure naked price action trading. So if from time to time I want to use a tool, I don't want my chart to be solely that particular tool. I'm just using this to help me make my judgment. Good. Let's go now to tips on. You can see here we have some tips. We have tips on trading with the Fibonacci. And before even reading all of this, I wrote it so I already know what is there. Before even reading all of this, the best tip I can give you is even the Fibonacci itself is not foolproof. All right, even the Fibonacci itself is not foolproof. So if you are using the Fibonacci, always use the Fibonacci in conjunction with other structures. All right, you can use the Fibonacci tool in conjunction with support and resistance. You can use the Fibonacci tool in conjunction with candlestick patterns. So let's just assume you have your trend. You have your trend. The market is bouncing here, forming higher lows, higher heights, higher lows, higher heights. Good. Then the market now is currently here. You put your tool from here to here. You obviously have levels like this. So if the market pulls back to this particular level, obviously you'll be using it as a point of confluence, right? You'll be using it as a point of confluence. Why? Because so this one has already given you information that the market is back to the trend line and it has fallen. It has fallen on our significant levels, which is either the 50% level, 61% level, or the 38% level. So you use it as a point of confluence. Or maybe we are trading support. We are trading support and resistance. We are trading support and resistance, and we can still use the tool. If the market is at our resistance, we can still use the tool to be able to determine where to get into the trade. Where to get into the trade, and it must be in a trending market. It must be either in an uptrend, where the market is making higher heights, higher lows, higher heights, higher lows, or it can be in a downtrend where the market is making lower lows, lower heights, lower lows, lower heights. All right. So with that being said, that is what I just wanted to point out about the Fibonacci tool. This tool is very, very effective. Please go back to your chart and do as many backtestings as possible. I can teach you how to ride a bicycle. I can teach you how to pilot a plane. I can teach you how to swim. But if you don't want to jump on that bicycle and fall and make mistakes and learn, there is no way you will ever know how to ride a bicycle. It's the same thing in trading. I can sit here and talk about these tools every day and show you how I use it, even on my own live accounts, but my results are not the same like your own results. You need to go back to your MT5 and do 3 years of back testing on the road. That means you go on the chart and you test 3 years of data. The data is already there. You do 3 years of back testing. You test on other pairs. You test on other time frames to be able to know and confirm by yourself how this tool is so amazing. And also let me know on the comment section the number of signals you were able to generate just by using this tool in conjunction with other structures like trend line. Try to combine it with trend line. Try to combine the Fibonacci 2 with trend lines. Try to combine the Fibonacci 2 with support and resistance. Try to combine the Fibonacci 2 with candlestick patterns. All right. So with that being said, we've come to the end of this video. If you want to watch the next video, which talks about trend line trading or trading support and resistance, then you have to check this video. You have to check this video. And if you want to watch all the videos on this playlist, then check this playlist. So with that being said, check the link on the video description to be able to use the same broker I use, because you may know how to trade, but if you don't have the right broker, there is no way you're going to make money. So check the link below to be able to join, to sign up with the best broker. And you can still follow this video to watch the next video on the series, which I talk about the bounce and break method. And if you haven't watched all the videos on this playlist, then click here to watch all the videos on the playlist. And if you like the way I teach, then please hit the subscribe button below or hit here to subscribe to the channel. And till then, I'll see you guys on another video.